Hello everyone. This is like a filler episode, like a filler video. I'm currently working on a video about continents, but it took a little bit longer than expected. So here is a more unscripted video that I have made, which will take much less time to edit and create and etc. This is just me talking and not really me researching and then writing about something. It is a tier list video, which you probably understand. I have for the last year been thinking about what taxes should be best, how one should use different taxes, etc. I will now rank these taxes in order, and I will try to explain them as we go. So it is S tier till F tier, where S is the best and F is the worst. So I will start with the best tax, which is a land value tax, in my opinion. Now, a land value tax is a tax on the value of the land. So not on your house or your factory, but the actual land on which it is laid. Because you can't yourself improve the value of your land. The value of the land is mostly decided from what is around it, and if it is in a stable country and things like that. If there is a lot of amenities and facilities around your land, so if there is a lot of stores like gyms, different transportation methods, etc., these things will increase the value of your land. And it also helps with people who rent out their land, so like landlords, because if they now have to pay this tax and then they decide to increase the rent to the tenants, then by definition, if they don't actually change the house the tenant is living in or in some way improve the service they are providing, that would mean, oh, now the land has increased in value, so they would just end up paying more in land value tax. And since you can't easily increase the amount of land, the tax will only be paid by the ones who owns the land, and it won't really be passed down to tenants and others who might pay it indirectly. Now, the worst kind of tax is a poll tax. When I'm ranking this, I am mostly considering how progressive the tax is. So the wealthier you are, the higher percentage of your income the tax will make up. So a wealthy person will probably own a lot of land and will therefore pay a lot in land value tax, while a poor person might not own land at all and would therefore pay a 0% land value tax compared to their income. Now, a poll tax is the opposite of progressive. A poll tax is giving everyone a fixed amount that they need to pay in taxes, like 100 euros. And this does not change with your level of income or with your level of wealth. So someone who might have a negative net worth will just fall deeper into debt or might lose what little assets they might have. And if they simply don't have anything, they don't have debts, they don't have any property, any cash or anything, then they would either go into debt to pay the tax or they might be jailed because they don't pay taxes. So it's not progressive at all. This was used before, for example, in certain African colonies, you have to pay this much, and you would usually pay it by giving the colonial master a set amount of natural resources, unless you will get punished. But in modern societies, this is a tax that is very rarely used. It just does not really makes any sense to use it. Now, I was talking about progressive taxes, and I would now add a progressive income tax. And this is that in a given level of income, so let's say from €0 till 10,000 euros, you pay 0% income tax on that bracket of income. But what you make after 10,000 euros, you will, for example, pay 50% or 20%. So let's say if after $10,000 you pay 50%, somebody making 20,000 euros or dollars would then pay an effective 25% income tax, as the first half of the income is not taxed at all. And obviously you can have multiple tax brackets and different values, but the main thing is that when your income increases, the tax rate also increases. So that's why it's called progressive. Another thing I would also like to add, which is sort of progressive, is a negative income tax. This means that you will get a UBI, let's say $1,000 each month, and when you earn more and therefore pay more in taxes, this UBI will decrease, and at some point you will break even and you will pay more into the government than what you get back into UBI. So it's adding a universal basic income into the tax structure. I was listening to an audiobook about this, and I believe it was suggested by financially conservative Americans to help some people who were struggling financially, especially African Americans who has been subjugated by other parts of the population for quite a long time, especially during slavery and also after. And this was meant to help those who had really low incomes. But this has often been criticized as not really helping the problem, giving everybody full work and a good salary, but instead giving them a little something, and then, for example, only having a fixed rate income tax afterwards and not a progressive income tax. But it is still sort of progressive, which is why I put it here. So yeah. I will also put severance tax here. Now, as you might understand from the image, this is a tax on the exploitation or use of natural resources. As some of you know, I am Norwegian, and Norway is quite well known to have severance taxes, which they use to first build up their economy and pay down debt, and then later used to build our sovereign wealth fund, often called the oil fund. So I am really a big fan of this tax, as natural resources are often thought of as belonging to the nation or the people as a whole, and not to just the individual who owns the land. Yeah, I will also add a wealth tax here. I will say that it would be in S tier if it was a global wealth tax, like I believe Thomas Piketty has proposed. But when there is a wealth tax in a single country, then those who pay a lot into the wealth tax, like the very richest in that country, would have an enormous incentive to move out from that country and move to a country which does not claim a wealth tax. So, for example, in Norway, the richest of the rich has moved to places like Switzerland, Sweden, or Estonia, so that they can reduce their wealth tax, as the wealth tax makes up a really large percentage of their taxes each year. simply because it is calculated based on their wealth and not the actual income they get. As for example, in other countries, you would tend to hide your income so that you're not taxed on your income, but it's more illegal to hide your wealth in many cases. You can just not take an income if you own the business, but it's a bit shady to suddenly not own your company, even though you're benefiting from it economically. Now, these are a lot of good taxes, but now we are starting to move to less good taxes, but which I still consider good. So these are, I will say, incentive taxes. So sin taxes, sugar taxes, eco taxes, and carbon taxes. These are taxes on things that are generally considered not good. So a sin tax might be on ethanol, like alcoholic drinks, tobacco, etc. Sugar taxes would be on like candy, sugar, and unhealthy food. And eco taxes and carbon taxes are on things that pollute the environment. So obviously carbon dioxide and methane, the things that cow burps, for example, and just pollution generally in eco taxes would be something that would be taxed and would help reducing these actions. Like it would help reduce pollution, and it would make healthier alternatives comparatively more inexpensive. And these taxes could also be used to alleviate the problems and help solve the problems. So you could use the carbon tax to pay for renewable energy, and you can use the sin and sugar taxes to make healthy food more cheap, more inexpensive, less expensive. For example, I will also add inheritance tax to S tier. It still has the same problem with a wealth tax, in that if you are going to inherit a large sum, you might move out, or if you want your children to inherit a large sum, you might move to another country before you are united with Earth again. So it still has that problem, but at the same time, I don't really think it is that big of a problem, as the person who is giving up their inheritance won't actually feel the tax. It is only those who will inherit the tax, and you could set the threshold for inheritance really high, like 5 million euros, for example, which would exclude the vast majority in any developed country. So it would only be the richest of the rich who would experience this tax. And the one who is actually passing away the inheritance won't actually feel this tax. And it would help with the problem of dynastic wealth, i.e. people passing down their wealth often to the firstborn, and then the firstborn can accumulate more wealth, and so you get really high income inequality when you don't have something like you have to split your inheritance equally, or having an inheritance tax. And now, what else do we have? You have like the metabo tax, which is a tax based on the circumference of your waist. At first glance, it is very similar to these types of taxes, but it is a tax based on just the physical appearance of a person, which seems a bit too authoritarian. You can't really change your physical body that easily, so it doesn't really make a lot of sense to have a tax on this. And also, if you're really thin, you might still have to pay the tax, or you might have an increased tax compared to someone else, as you are too thin, for example. And it's really hard to define, and it really brings up a lot of problems when you are paid a tax based on your body. I remember there was a tax in British India where women would have to pay a tax in order to cover their chests, which obviously is quite a ridiculous tax and quite tyrannical in almost every sense of the word. So it's not a good tax at all. I will now add value added tax, and what else? Sales taxes. These are the same type of taxes. A lot of these are basically the same tax. They are a tax paid by the consumer when buying a product. In Norway, for most products, it is 25%. So you have the price of the product, and then the store adds 25%, multiplies it by 1.25, and then you have the price that the consumer pays, and then it collects the tax and then later pays it to the government. And sales tax, it is the same, only that the tax is actually added when you are buying the product, when you are standing in line and buying the product, and not included in the price that you see when walking around in the store or shopping online. So these are really similar. These taxes are regressive. They are the same for every product category. For example, in Norway, there is a lower tax when you're buying food, for example. It's around 14-15% instead of 25%. But they are regressive because a poor person will have a higher propensity or tendency to consume. So they will use a higher proportion of the income on things like groceries and other necessities of life. Meanwhile, a wealthier person will probably spend a little bit more, or maybe double what a poor person spends on groceries and other necessities. But if their income is 10 times higher, the amount of their income which goes to paying value-added tax or sales tax will be drastically lower than the percentage that a person with a low income will usually pay. So this is why these are not really that good taxes. They are quite easy to administer. It's probably easier to just get the company to pay the taxes than some of the other taxes, like for example a wealth tax. But at the same time, they are very regressive, and there are a lot of other taxes which one can use, which are less regressive. So D and F are regressive taxes, or just taxes which doesn't make sense. Another tax which does not make sense is the window tax. This is similar to the poll tax, i.e. it's a fixed sum for something, and it would be a fixed sum for the amount of windows in your house. I know that this was that this was one of the main taxes in Restoration France, and this is not a good tax, because if you're really poor, you would just have no windows, no openings in your house, so your house would be completely dark. And if, for example, there was a fire, you would only have one way to escape. And and so this tax is just really tyrannical. It's not good. There are a lot of better taxes that one can use, and you also have to go around and survey all the houses to figure out how many windows there are, and what even is a window. Will it also account on doors and on chimneys and on ventilation, right? So it's really not a good tax at all, I would say. Now, I was talking about how value-added taxes are regressive. A tax that is flat is a flat income tax. I know in Estonia they have a flat income tax on 20%. So 20% of your income will go in taxes. I think yet you can withdraw some of the taxes. So I think it is in reality slightly progressive, but still the actual tax is flat. So 20% of all your income. So this makes C sort of like the baseline, like a flat tax. Yeah, I think that one should instead opt for the other taxes, but sometimes you just have to use it. I know at least previously, Norway would have a flat income tax on 22%, and then they would add a progressive income tax above that. So when you make above a certain level, it would then add 2% and then 4%, 10%, etc. So they would use a combination of these taxes. But they have changed the tax code a lot, so now it is almost fully progressive, as you can withdraw a certain amount of your taxes up to a certain point, which makes it more progressive than just 20% and then adding taxes above a certain threshold. Payroll taxes are often also flat, so they are in C, the same category as a flat income tax. In Norway, the payroll tax is, I think it's 14.9%, but lower in northern regions of Norway. So this is a tax based on the income of the employee that the employer, like the business employing you, have to pay to the government because they get to employ you. So yeah, this is that. Corporation taxes are often also flat. In Norway, they are 22%. In Ireland, they are something like 14%. In the United States, I think they are also around 20%, maybe even lower. I know France, I think, has a progressive corporation tax, so the corporations will pay a higher tax based on their size. And I think the very biggest of French companies have to pay a certain percentage of their profits back to the workers. Then we have other taxes. You also have no taxes. Some of these I simply don't know how to rank, as they are a bit complicated. Often they only occur in the United States or a few other countries. For example, capital gains tax I think is a bit hard to rank, because capital gains taxes are a tax on the difference between the purchasing price of a security and the sales price of a security. So if you buy low and sell high, the government will take a certain percentage of that in taxes. For example, in Norway and I think other European countries, you can have a special account where you can buy and sell stocks and index funds, and then you can wait by paying the capital gains tax until you actually withdraw from the account, which is quite beneficial, but it is still a tax on the difference between on your profit from buying and selling securities. And I think also from dividends you get from companies paying dividends. I think this is hard to rank. They are often a flat tax, so they would go in C, but it is often those who make the most money who actually own securities and profit from buying and selling. So I think it should probably be high C or low B. Something else that falls in this category is tariffs. So basically, tariffs is like a value added tax. It is a tax on a company exporting to your country. So let's say, for example, a Chinese company want to export phones to the United States, and then the government would say, no, you have to pay 100% tariff when exporting this to the United States. And then the company exporting this will be like, okay. Our profit margins are not so big that we can sell it at the same price we otherwise would. So therefore, the American phone would be twice as expensive because there is a 100% tariff on the phone, which would make American-made phones more competitive compared to the Chinese phone, although there are basically no phones made in the United States. So effectively, it would just be a sales tax on goods coming from other countries. But at the same time, it is a discriminatory tax, and discriminatory not in like violation of human rights, but more like it can be used to reach national goals. So similar to the capital gains tax, it is sort of in between these categories. Tariffs, it is in between these categories. But I think it makes sense to put it in high D or C. C is a bit crowded right now, but for now I will put it in D. And simply because it shares a lot of attributes with value-added tax and sales tax. Value-added tax is before sales tax because it is included in the price you see when shopping, which makes a whole lot more sense than suddenly finding out what the tax is right before you're buying it. But anyway, so it will be the highest in D tier, simply because it has some benefits that these two don't. Let's see, what more do we have? We have now destination-based cash flow tax. From my understanding, this is similar to digital services taxes that a lot of European countries has created. So this is a tax that a lot of European countries has introduced. I think France has introduced this tax. So this tax basically means that, let's say that a French person buys a YouTube Premium subscription, for example. Then a portion of that purchase, the $12 or so amount subscription, will then be collected by the French government instead of going to Google, who might pay to the United States or use a complicated tax structure to pay no taxes at all, or might use a complicated tax structure to pay no taxes at all. And so how will we rank this? It is very similar to a corporation tax, but it does have a very cool benefit of the tax being collected where the value is actually created, the value would be created in France, that it is provided to a French person instead of not being collected at all or being collected just where the company is registered, which is often in the United States or perhaps China or other countries which are known for having a global reach. So I think it makes sense to put it in C tier, as it is in many ways a corporation tax, as it is based on the revenue in that country. So I think it makes sense to put it on the same tier as a corporation tax, but slightly above it, simply because it has a benefit that corporation tax don't. Luxury sales taxes is a sort of upgraded version of value-added taxes, where it is not added on groceries and necessities, but more on luxuries, like I am buying this really expensive Swiss watch or German car. If you're purchasing something like that, then you probably have a high income, and therefore a large proportion of your salary might be used to pay these luxury sales taxes. So it's an upgraded version of sales taxes, but it is still, I don't really think of it as very beneficial. Also because a lot of poor people spend a lot of money on luxuries. So you have luxury brands like Louis Vuitton, etc., would spend a lot of their money, save up a lot to buy some luxury products that they can use to show off, to show that, oh, I am in fact not poor and lacking many of the necessities of modern life, even if they do actually lack some income which will be desperately needed. So it's an upgraded sales tax, but it would still be paid by a lot of people which probably should not pay this tax. They should instead get support from wider society. You have property taxes. Property taxes is a tax paid on your property, so your house. I think sometimes it is paid on the house and the land, but for this video I will just say it is only paid on the house because we already have a land value tax. A house is a big investment, probably the biggest investment or the biggest asset, although some people might debate a house being an asset instead of a liability. But I will consider it an asset for this video. So that makes it a sort of wealth tax, but only on the house. And the richer you get, your house, your primary residence or other houses will make up a smaller and smaller proportion of your total wealth or net worth, as you will probably start by a lot of index funds, shares, mutual funds, etc. Which makes this a wealth tax on those who are like middle class and not really like bourgeois, like not really owning the means of production but owning some, well, property. So I think this makes it in A tier. It is analogous to a wealth tax, but it's not really a good wealth tax, although it does have the benefit of you can't really move your house to another country or to another tax jurisdiction, although some people on the border between the Netherlands and Belgium do actually do this, I think, but these are minor cases. You can't really do this most of the time. So yeah, we now have gross receipt tax. Basically, this is a tax on the total sales that a company makes. So This might be beneficial if a lot of companies in the tax jurisdiction uses different accounting techniques to, for example, say, oh, we haven't not made any profit this year, so therefore we can't pay any taxes to the government. Or we even made negative profits, meaning that we can withdraw it when we suddenly do make profits, even though we will never make profits, because we account it illicitly or exploit the tax code so that we don't really have to pay corporation tax. So in that way, it would be a fix to corporation tax. But on the other hand, it might be make up a really, if you were to translate a gross receipt tax into like a tax on the company's profits, which is what corporation taxes usually are, then for a company with really small profit margins, the gross receipt tax will be analogous to a really high corporation tax. So I think it should be next to the corporation tax, but slightly lower, as just if everything was going well, it would be a lesser tax, because I think it makes a lot more sense to tax based on profits, as that is what the shareholders and the company actually gets, rather than sales, which is just like what their customers is paying the company. Which is why I think it should be next to it, because it has some benefits if a lot of companies cheat. But if everything is working properly, then it's a worse tax than corporation tax, I would say. We then have expenditure tax, no taxes, windfall tax, and harbinger tax or cost. I think no taxes is really hard to rank, because in some way they are basically a 0% flat income tax. So it is not progressive at all. It is just no taxes. Obviously, this is going to be more beneficial to people having a large net worth or having a large income, but effectively it will be the same tax rate for everyone. So I think it makes sense to have it here, although no taxes seems a bit sketchy, because then social services will probably be paid in other ways. So either it is on the bottom C tier or the high C tier, but for now I will put it in bottom C tier. I don't actually know what these taxes are on the top of my head, so I will have to look it up on screen here. Yes, what is an expenditure tax? Yes. I remember this. It is a tax on... It is basically the opposite of these things. So it is basically government subsidies. So it's like a negative tax, but I think it should be here, as it is basically just a government subsidy. For example, in Norway, if you install solar panels, you will get 4,000 euros, I think, to do so. No, it was expenditure tax. So yeah, that's why I will put that there. Then we look at windfall tax. A windfall tax is a higher tax rate on profits that ensue from a sudden... Oh, okay. So I think Tony Blair did this when he was PM in the UK, where he put a windfall tax on banks, I believe. And there has been some discussion to have a windfall tax or a one-time wealth tax in the UK. I think this should be S tier, as it should not be regular, But sometimes if you suddenly need to, for example, improve infrastructure or suddenly improve the armed forces, for example, like what Germany is doing right now, then a windfall tax could be very beneficial, as it does not have the same problems with a wealth tax, and but it do have the same benefits of a wealth tax. We will now look at the last one, a hydrogen tax. Oh, okay. And this is the one I was talking about in the start. So it is a tax on properties that you own, but it is self-assessed. So I find this really complicated because okay, so I really don't know where to place this. I think it is similar to a wealth tax, but it being self-assessed, I think makes it a little bit sketchy, because you can just say, okay, my house is worth $1, my stock portfolio is worth $1. So I think I'm a bit skeptical to this, but I think it's analogous to a wealth tax. So I will put it in this tier, but pretend that it is not here. So yeah, in S tier we have land value tax, servants tax or resource tax, inheritance tax, and windfall tax. I think I will have inheritance tax last because it has some problems but not the same problem as a windfall tax. In A tier you have a wealth tax. Again, it would be probably number one if it was globally, like Thomas Piketty has suggested. If I remember from my economics book, he suggested having a wealth tax globally and then using that to pay for innovations in healthcare, like making important vaccines really cheap, and, or for example, helping distributing them, and paying that to researchers so that the very poorest of the human species would get better access to healthcare and other such services. We then have progressive income tax. This is really beneficial to make income inequality more equal. So you might have a Gini coefficient, which basically measures how equal economically a country is. So before tax, it would show high inequality, but if you have a progressive income tax, the inequality would be lowered, so you would have more equality post tax, which I think can be really good. And then you have negative income tax. This is very similar to a progressive income tax, but it introduces a universal basic income to the picture, which can be interesting, but as mentioned before, it does have some problems, which one has to think thoroughly through before introducing such a tax. We then have property taxes, similar to a wealth tax and a land value tax, but it is paid on your house, which would still be progressive, but not as progressive as a pure wealth tax or a pure stocks and bonds tax, for example. Then habitat tax is a self-assessed wealth tax. As I said before, this is a bit complicated in my mind. I don't know too much about it, so maybe when I have learned more about it, I will make a follow-up video. We then have a lot of taxes that are used to dissuade people from doing actions which are seen as negative. So a sin tax, for example, paid on gambling and substances which would be affecting the individual negatively and also via the society. Sugar tax, it's unhealthy for the person, and when you have a large unhealthy population, you will have higher government expenditures, which means higher other taxes. So having a tax to dissuade people from living unhealthily and increase the likelihood of they opting to try to live more healthy is really good. Same with carbon taxes and eco taxes. It makes it costly to pollute, which makes it an incentive to not pollute, which is good. We need to take care of our planet so that it can be sustainable. Then we have these taxes, which are represented by the flat income tax. They are mostly flat taxes on different things, so capital gains tax, the profit you make from selling and buying securities, and also from dividends. You have a destination-based cash flow tax, or a digital services tax, as they are often called in Europe, which is this type of tax but on digital services, which helps global corporations actually pay their taxes where the value is created or where the service is actually served. Then you have corporation tax paid on the profits of a company. This is often a flat tax, so a singular percentage regardless of how big the profits are. But countries like France, this flat tax is higher or lower depending on the size of the company. Then there is gross receipt tax, which is similar to a corporation tax, but instead of the tax being paid on the profits of the company, it is paid on the total sales of the company. Then flat income tax, this is what Estonia has, for example, 20% of all income. Payroll tax, this is something that Norway has. It is also a flat tax on around 14-15%, I think. Then no taxes, which would effectively be a flat income tax at 0%, but at the same time, if you do have no taxes, then government expenditure is funded in another way, which might be from natural resources, which would basically giving up a flat income tax or a progressive income tax for a tax which in many ways is better than these types of taxes. Then we have the regressive taxes, so like tariffs. It's in most ways a regressive tax, but it does have the benefit of being discriminatory, so that you can use it to set industrial policy, which can be quite beneficial. Luxury taxes, slight improvement over normal sales taxes, which is just a percentage of the value of any good or service. But this tax only applies on luxuries, but at the same time a lot of low-income individuals would still buy luxuries, so it is not as progressive as it might seem. And then you have the authoritarian evil taxes like poll taxes, a singular number of currency you have to provide the government with as a tax, often regardless of your ability to pay, a tax based on your body shape, obviously quite authoritarian and can be very hard to implement. A lot of people are different, and if you are malnourished, would you still have to pay taxes, or would your tax rate increase as you are malnourished? Who knows? It's probably not a good tax. And also in developed countries, those who are struggling with an unhealthy diet and therefore might have a larger waste are often those who have a low income, as they might not afford to spend a lot of time working out or spend their money on healthier products to lower their risks of different diseases. So it might be thought of as a good tax like these taxes, but in many ways it is quite a diabolical and evil tax, as one should not really tax people based on their appearance. And then there is a window tax, just hard to administer. You need someone to look at every window, If you are poor, you can't have windows, which is very dangerous, especially when you factor in fire security. I mean, for example, in Norway, every bedroom needs 2 ways of getting out of the room. So one window and one door. This would not work in if you had a window tax, because poor people would not be able to have different ways of leaving their bedroom. So it's not a good tax at all. Everything in FTR should not be implemented anywhere. And like as a also B-tier are good taxes, and in combination I think it would be a very good. But still, the Harbinger tax a bit complicated, a bit hard to understand in my opinion. So I think this one is the most likely to be put somewhere else. Same with expenditure tax. It might have a different meaning than what I think it means, which is basically a government subsidy. So yeah, these are basically all taxes that exists ranked. I hope you enjoyed the video. I will soon publish a video about how many continents there are. I have been working on this video for quite a long time and thinking about it even longer. I hope you will enjoy that video, and I hope you enjoyed this video. Thank you very much, and see you next time. Bye.